Hello, hello. Good afternoon. If you can hear me, just let me know. Just let me know if you can hear me. Hey, Philip. Hey, Zoran. How you doing? Just wanted to do a quick sound check. So if you can hear me, please let me know. Today we're going through the strategy clinic. Let me just see. I think it's a bit off. Oh, okay. Great. I've just enabled the chat again. So if you can help me try it out one more time. Just because, if you have any questions, you can ask me in the chat. So just wanted to make sure that that works. All right, super. Thanks for that, Zoran. How are you doing? Just wanted to see how are you doing? How's your trading been going? I'll give it a couple of minutes as everyone else comes in, but let me know. We've had quite a little bit of volatility in the markets. So, have you been trading well? Have you been so far so good? I see that you've been turning up for the session, so that's good. I would like to find out more about how you trade, just so that I can figure out, if there's anything that I can help to maybe tweak your strategy or tweak your approach a little bit differently. Let me see if there's anyone else. Okay. Just double check something. I'm having a little bit of issues with the system at this point. Just give me a moment. Hey, Philip, how are you doing? Let me just check something at this point. All right, seems like it's good to go. Fantastic. All right. Philip's replying as well, so I know the chat works. Let me know. Let's see, what else can we go through today? All right. If you are ready, let's get started. Okay, now. Okay, so let's go. As usual, oh wait, I saw something come up. Okay, as usual, what we want to do is get the disclaimer out of the way. All right. Just jumping in a little bit, just been a bit messy with the slides at this point. Okay, so you can see my screen all right. I just wanted to do a quick disclaimer just to make sure that you guys know. I will be looking at some possible trade ideas. I'll be sharing with you my views, my thoughts about the markets. So remember that any information, contacts, opinions expressed in this presentation and the following slides are those of presenters myself, not necessarily those of Vantage. So if you are looking to jump into any trades, just make sure you take this as educational purposes, not constitute as investment advice or consultation on how a client should trade. Do your own due diligence. Again, I sound like I've been repeating this over and over, but always make sure that you remember to manage your trades, manage your leverage, your margins as well. Don't over trade, don't over leverage. All right. So with that said, let's get straight into it. Can you see my charts? All right. Again, let's bring up Forex Factory. It's quite interesting news that we've had over the last couple of days and also most recently. So you see my Forex Factory, all right, guys? Yep, fantastic. So thus this morning, all right, just this morning, going through some news events from today and also yesterday. So I'll start with yesterday first. We saw yesterday New Zealand increasing their interest rates 50 basis points from a 2.5% to a 3%, right? So increasing interest rates 50 basis points to a 3%. But what we actually saw with that was the Kiwi dollar dropping, right? For a brief moment, it shot towards upside, but then it dropped. I'll show you that onto the charts. And also, that brought about some volatility on the Kiwi dollar. More importantly was 2 p.m. GMT plus 8, we saw the pound CPI number at 10.1%. It was a 9.4, expected 9.8, but came out at 10.1. So there was a bit of a surprise there with the UK CPI staying so high despite the Bank of England with their relatively aggressive interest rates hike, right? So that actually caused the pound dollar to drop, right? A bit counterintuitive. We saw the pound dollar drop despite a strong CPI number, because with such a high inflation and inflation still continuing to grow, interest rates continuing to go up from the Bank of England, the GDP for the UK has actually dropped, right? Gone into that negative range, that contractionary phase. So the UK seems to be running a risk of heading into a stagflation, right? A stagflation is when we see prices climbing, right? We see inflation climbing, but we actually see economic activity dropping. So that's a concern there, and that's what actually led to the pound dollar dropping. Okay, with that, what else we saw was the US retail sales number, a little bit surprising there. I was expecting a good number, but I didn't think it'd be that much better. So core retail sales was 0.9, right? It was revised from a 1%, expected a minus 0.1%, but it came out at a 0.4. So a little bit of a surprise there. Retail sales month on month stayed flat at a 0%. Had a very brief interruption to the dollar index strength, but then we saw dollar index continue to climb towards the upside. With all that said, today has been a little bit quiet. Markets have been trading in somewhat of a consolidation in the broader view. If you zoomed it down to the small time frame, had a bit of a spike, but then it retraced very quickly. We had the FOMC meeting minutes early this morning at 2 a.m., right? FOMC meeting minutes today was actually a bit of a non-event, because meeting minutes basically tell you what happened or details of what happened before, right? We know that the Feds actually increased rates. The key takeaways from the meeting minutes, I'm not going to make you read through the whole thing, but the key takeaways were that this was the first one, that the further rate increases could have, or is expected to have, a big impact on economic performance. Economic performance in terms of unemployment, right? Unemployment rate could start to rise, and also possibly rate increases could cause a decrease in demand, right? A decrease in demand. But despite the possible side effects of further rate increases, the FOMC is still expected to continue with their path of rate increases because they want to bring inflation down from the 9.8%, or can't remember what the number was at this point, down towards their 2 to 3% target range. All right. So with that, despite that possible hazard towards economic performance, the Feds are seeing interest rates hikes to continue until inflation eases substantially. Okay, so we're looking at further rate increases to come from the US. So because of all that, what we actually saw, I'll show you here onto the charts straight away. There we go. On the dollar index, I'll clear that out. Clear that one out as well. It climbed, right? Last night, I'll show you this on the H1 time frame first. Yesterday, the dollar index was trading slightly towards that 106.50 level, but with the news through the day, it pushed towards the upside. It went towards almost towards the 107, or almost hitting that 107 level, but retraced back down. Okay, no, this was today. Let me see. Yesterday. This was yesterday there. Okay, so it climbed. It came down towards the 106 level, and then it pushed up towards that 106.83 level before it today retraced back down again. Earlier today, we saw a push higher, but now retracing back down. Just be extra careful on the dollar index. Why I say that is because going back to the H4 time frame, how I see it is that it's been trading right across, right? Let me see, where's my lines? There it is. All right, it's hit that level of 106.96, and it seems to be resisting that points over and over again. We've already seen it happen once here. Again, came close at this point, resisted, and now most recently resisted again. So resisting those levels could show that we might see some could see this continue to hold that strength on the dollar index. If it breaks towards the upside, then we could see further strength towards that 107.50 level. You can see that it's tested here and again. Or if it breaks above that, then we can see further upside. But the main thing now is to focus on whether the dollar index can break above that 106.96 level towards that 107.57 level. Okay, so looks like it's going to resist. What we have to do is look for any news tonight or any further hawkish sentiment tonight to push the dollar index towards the upside. So I'll also do that and show you that just looking at the tails, ignoring the tail a little bit there, or if that's the case, we can also see a bit of a upward trend towards the dollar index. Right, you can see a bit of a pattern forming there, a pennant up, a pennant towards the upside. If it does break lower, we could see it drop, but I think that with the current hawkish view on the dollar, index, I'm looking for this to come down, test before breaking above that level to push towards that 107.58 level. Okay, so that gives us a bit of a hint of what we could be expecting, a bit of a consolidation with possible further upside on the dollar index. And with that, I want to show you is also the Kiwi dollar, right? So I was doing this analysis before, and this is actually quite interesting for those of you. Actually, do you guys trade much of the news? When you see a news event happen, do you actually trade that? All right, because what I would show you here is that yesterday, right, is that yesterday as the news event happened for the Kiwi with increasing interest rates on the 13th of April, they increased it by 50 basis points, right? And you can see on the 13th of April, if I did a vertical line there, you can see that on that news release, right, I'll do one before just so that it's easier to see. On that news release, we actually saw, despite an interest rate increase, we saw the Kiwi dollar trade towards the downside. Okay, and again on the 25th of May. So on the 25th of May, okay, I'll move it one again, I'll move it one across. Despite a 50 basis point increase again, we didn't see a big upside on the Kiwi dollar. We actually saw it shoot up, shoot back down, and trade still within that somewhat of a doji fashion there. And then lastly, on the 13th of July, right, I'll do it one before again. You can see that it also shot up, shot back down, and still traded in that doji there. So a little bit different, or a little bit of a different reaction there on the Kiwi dollar with the interest rates decision. You know, despite a rate increase, we've seen the Kiwi dollar continue to trade with no significant upside despite that 50 basis points increase. What we actually saw here on to the 17th of August, similar fashion, right? In this case, instead of having a doji, we actually saw it trade towards the downside on the Kiwi dollar. So what you can see is that predominant trend, that big downward trend, actually has a bigger impact on the Kiwi dollar compared to the actual news of rate increases to push price towards the downside, towards the upside. That was an analysis I was thinking of before the news. I actually caught that downward move. Right now, Kiwi dollar, coming back to the H4 time frame, trading at that 0.6270 level, looks like an area of consolidation, right? You can see that it's traded around this area here again over the last couple of times. Right now, anticipating that it's going to trade within this area. No clear move, but what I'm actually looking for is if price can break below that level, right? If price can break below the 6260 level. Okay, why this level? Somewhat because it started at this point, but we actually saw it testing before bouncing back up. If price can break from this point, I would say that the next possible target level would be about 6197. All right, 6197 before we could see significant downside. I think that the Kiwi dollar is likely to hold at this level, right? Kiwi dollar is likely to hold at this level as the dollar index retraces. You can see as the dollar index retraces towards the downside, that's likely to push the Kiwi dollar back up a little bit. Okay, so I think that we could see it bounce back up, maybe test that 0.63 level again before turning back down, gain some strength before turning back down towards that 6197 level. All right, so that was the Kiwi dollar to look at. Another one to pay attention to was the pound CPI. That was yesterday. We saw the UK CPI at a 10.1%. So the UK CPI, I'll clear that out so it's easier to see. yesterday, as that news got released, you can see that it got released at 2 p.m. GMT plus 8. As that news got released, the pound dollar just went straight down towards that 1.2040 level. Okay, I was just thinking of this before I jumped onto the call, is that the pound dollar still struggles to break below that 1.20 level, right? Still struggles. It tested once on the 5th of August, came very close on the 16th, and again just today it came very close before bouncing back up quite strongly. So psychologically, that's a very strong level that's possibly going to hold for now. One thing that it's also to consider is that we have this move towards the downside. All right, so I'll move the chart a little bit towards, so I'll draw that line there like that. So hey, we might actually see the pound dollar. I think that we're still going to see the downside, but with the way the dollar index is moving, anticipating for it to sit there, bounce around this level, maybe come up, test that diagonal resistance level before turning back down to test that 1.20 level again. Okay, so it might sit there, do something similar to that, but to a lesser extent, come up towards that 1.208, about 1.2080 level before turning back down below towards 1.20. I wouldn't be betting that price is going to break 1.20. I think it could come and test this point. I would only be looking to sell down if it breaks below this 1.20 level towards the downside. All right, so makes sense so far? Does it make sense to you guys so far? If price does break below 1.20, I would say the next downside level would be about, no, that's a bit too near there. I would say it's about those tails there at 1.1920. So it could be, something to watch. Be a bit patient on this. Trading is all about being patient, is for that selling opportunity below 1.20, so 1.1980, about a 30 pip stop loss, take profit, immediate take profit about 60 pips, a 1:2 towards the downside on the pound dollar, only if it breaks towards the downside of that 1.20 support level. All right, good stuff. Just check something there. All right, okay, cool. So with that, what else do we look at? Retail sales number, as I was telling you, at 8:30 last night, GMT plus 8, we didn't actually see too much of a move on the dollar index. Right, this was at 8:30. Where was it? 8:30 there. Right, so it actually shot up, came back down, and still pushed towards the upside. Didn't do too much on the dollar index, despite a little bit better than expected core retail sales number. Okay. If you have any questions, any charts, or any particular trades that you would like me to look into, please let me know. Or any trading strategy or thoughts that you would like me to look into, please let me know as well. Today, FOMC meeting minutes, we actually saw at 2 a.m. that brought the US dollar index down, but hit that diagonal level before bouncing back up again. Okay, without that diagonal level, if we did it before that, we would have actually seen it test and bounce back up again. So now as a revision, so a way to approach your trades, always look to revise your lines, check your lines and revise to adjust your lines there. Okay, now looking like the dollar index possibly going to push back up and test that 1.107 level again. with the news today, employment data being released for Australia. Employment data being released for Australia. Bit of a surprise, right? I was watching this news. I was a little bit surprised that we saw employment change from an 88.4K, expected only a 26.5. Not a big change expected there, but we actually saw employment change decline quite significantly, minus 40.9K, right? So there's a bit of a surprise there. And then unemployment rate dropping slightly from a 3.5 to a 3.4%. So a bit surprising there for the Aussie dollar, right? For the Aussie employment numbers. What we actually saw was the Aussie dollar this morning traded there. Where was it? Okay, that point there just traded briefly towards the downside, came down further through the trading session, came very close or tested that 0.69 level before bouncing back up again. So no clear directions. Unfortunately, if you're looking at it on the H4 or the H1 timeframes, today prices have dropped, bounced back up on the Aussie dollar. Same thing on the Kiwi dollar, it's dropped, bounced back up, still trading in a bit of a consolidation, very tight consolidation today. Pound dollar as well. So I'll take that away for now, right? Pound dollar as well, dropped, hit that level, still sits in a consolidation. Euro dollar, tight consolidation between that 1.0, almost 1.02 level and the 1.015 level, right? Trading in a tight consolidation. I think that it might break towards the downside, but it's not ready yet. Just to show you a few more charts, just to highlight the point. US Swiss franc, again, consolidating, testing higher, consolidating at that 95, 0.9525 level. So again, no clear directions yet. The US yen consolidating at or just below that 135.50 level, right? It's hit, bounce back down, trying to climb back up again, still consolidating at that level. No clear directions. So what you should realize or notice here is that most prices or most currency pairs are consolidating, are sitting right across, right? They're trading right across. It looks like, two things can happen, right? Two things can happen. Either it's going to consolidate, especially in the US yen's case. Either it's going to consolidate, hit that resistance level before turning back down, or break that 135.50 level towards the upside. Okay, all the likely scenarios. Same with the euro dollar. If it does break, I'm looking for it to break towards the downside. Aussie dollar we spoke about before, possibly not a good trade idea yet. It's just in the middle of two levels. Kiwi dollar possibly to break towards the downside, but you realize that as I'm drawing the lines, as I'm doing that brief analysis, we're expecting a lot of downside potential, or rather we're expecting a lot of US dollar strength. It seems to be highly dependent on the dollar index breaking above that 106.96 level or 107 level to push towards that 107.57 level, right? So what are the reasons that could push it up? What are the reasons that could hold it? Look into the markets. Tonight, we do have one news, not a big news at this point. The US Philly Fed Manufacturing Index was a minus 12.3, expected a minus 4.9. Might be a little bit of a better news, but not going to be a big price mover. All right, but tomorrow, you can see not a lot of news happening across the board. Okay, so not a lot of news happening across the board. with that, sometimes no news is not a bad thing. No news is not a bad thing. It could lead to a continuation of the current sentiment. All right. So a lot of times, or rather, a lot of traders would approach me and say, well, if there's no news, how do we look at what direction? Is it going to change? Is it going to continue? What's going to drive prices? Sometimes no news, you're likely to see a continuation. That means if this pushes up, if it breaks above that point, you can be looking for further dollar strength, right? Be a bit flexible with your trading approach. It doesn't always have to be fixed. You have some leeway to switch based on short-term sentiment. If price breaks towards the downside and you are happy to take on a little bit of a counter trend trade, that could be counter trend trade ideas. The next support level here on the dollar index would be possibly at about that 106.25 level. Okay, why I've just drawn it right across is you can see that it's supported several times here, most recently over the last couple, and then very recently tail tested those points before bouncing back up. So I don't think we're going to see massive or significant downside on the dollar index. It could drop, bounce off this level, back up again, or it could break towards the upside above that 106.96 towards the 107.57 level. Okay, so be a bit flexible. I would say that in a strong dollar scenario, I would be more keen on the euro dollar, right? Dollar strength, I'll be looking to sell the euro dollar down. If you're a little bit more aggressive, you could be looking at that 1.015 level as a place to sell down. If you're a little bit more conservative, I could say that about 1.013 or 1.014 level to sell down. The next key level, we all know that, I asked you guys previously as well, is the euro going to come down towards parity? Possibly. Okay, possibly. I see a question there, Zoran. I'll get to that shortly. But I think that before it comes towards that parity level, we could see it test about that 1.0068 level or area as how it's tested there back in July. Okay. So one of the question there is, a challenge to understand the trend. Actually, let me ask you the question. What are you actually, what are you using to help you tell trend at this point? Or how are you approaching identifying trend at this point? Okay, as you answered that, I'll bring this up because I found this was a very good example. Okay, so one way to identify or to help you identify trend, you could either use the MACD, you could the moving average, you could be looking just at that overall view. But what I think could be a very good visual is channels, right? So you can be looking to, at this point here, just connect up a few lines, drag it down, shows you that short-term trend, right? Again, as we do this towards upside, again shows you that short-term upward trend. This point here, I would say it's moving right across. Okay, so several ways to approach it is, hey, you could use trend to tell you or try and identify where is it heading, or you could also be looking to go at that point. Now, if I just looked at it and go, is this moving higher? Is it moving lower? Right, just most recently, or is it moving across? Okay, it's a way of eliminating the mistakes, eliminating the possible mistakes, right? So if we're thinking that, hey, look, recently price, since the 11th, right, of August, price has gone from 1.2248 or 1.2250 all the way down towards that 1.20 level. Price has been moving down. If at this point, as an example, if at this point you are more of a trend following trader, then looking to buy towards upside would be a counter trend, right? If you're looking to sell down, then you'll be following the trend, that recent trend towards the downside. So you could use it as a way to eliminate what not to do, because it might be easier to just look at that short-term move and know that, oh, it's been dropping. I don't want to be looking to buy it towards the upside because it'll be counter trend. Another way to look at it is that we have this channel moving right across. Let me just see if I can do that. I don't think I can do, well, okay, can do that. You can see that price has moved right across. And, for me, I don't like trading within a horizontal range, right? I don't like trading within a horizontal range. I actually prefer looking at a clear direction. I prefer looking at a clear direction, either to the upside or the downside. Okay, so it looks like, does that help you there, Zoran? With your trend identification, look at the channels pushing towards the downside. Okay, I think that as a first starting point, as a first approach, look towards using the channels, right? So just join up a few lines, drag it down, well, drag it down properly, right? You could actually look at it and say, price is moving lower within that shaded area in this area. Okay, at this chart, I would go with buy instead of sell. So you're talking about this here. Okay, so it might not be so much about identifying or feeling that you're identifying trend wrongly. That's actually good, right? So it looks like what he said is, it looks like it's at a support level. Okay, so from the little bit that I'm gathering so far, I don't think that you're having that much issues about a trend identification, more about identifying that support and resistance and the approach, right? So you can see that it's moving towards the downside, but you also identify this as a good support level, and that's why you're thinking that you could buy it towards the upside. That's actually fine. That's actually entirely okay as an approach. I would say that would be to put a term to it, that's what we call a contrarian view, right? Anticipating for it to bounce off this level and buy towards the upside, which could work out because it could be looking at buying at about that 1.2060 level towards that 1.21 level, tight stop loss, about 30 pips or even less. Still looking at a almost 1:1.5 risk reward ratio towards the upside. So it could work, and it's not wrong as well, right? So it's not so much about trend, it's about the approach. Identifying, what I feel that you're approaching it is, you identified a level and you are, lack of a better word, predicting that price is going to bounce off this level. I would suggest that if you are trading actively, if you are managing your trades closely, then try to react to the markets more than predicted, right? React to the movements rather than predicted. But if you're a bit more of a longer term trader, then you could actually look at this and say, all right, it's hit that level. If given that you don't have much time to look at it, you could be looking for it to bounce towards the upside, tight stop loss, a good take profit towards the upside, counter trend trade idea. is fine as well. So my mantra is that, there's no one method to approach the markets. There's no one method or one strategy to approach the markets. It's all based on how you are comfortable with it, right? I would always go for multiple trend following trades until it hits a level, until it bounces off a level. So more like in this case, a clear bounce before I would look to buy it up. I wouldn't be guessing that it's going to bounce at that point. Okay, so I like to trade what I see rather than trying to predict it. So I would be looking for the candle to form towards the upside before I would look to buy it up. Hope that makes sense to you there. Okay, fantastic. I would, I think I did the pound analysis already, but I would like to, for me, I'll wait for it to break below this 1.2040 level to look to sell it down, bearing in mind that there's a very short-term trade towards a 1.20 level and then look to sell it down further again. All right. So I wanted to keep this session as a quick and short and sharp session, just to make sure that you guys get the good information. Also, because there's no big news happening, just bear in mind that look at the dollar index there. It's really trading within that tight range. All eyes, don't rush into trades. If you're looking and you're entering more than 3 trades a day, right? 3 good time frame trades in a day, you're possibly more than that, you're possibly entering too many trades. I can tell you that today I've entered 1 trade. Maybe if the dollar index breaks above that 106.96 level, I might have another trade. But if not, I'm possibly not going to go into a counter trend. I'll sit there, I'll wait until it reverses back up again. Then I'll jump into trade. All right. So some things to consider there. Don't rush into trades. Prices, if you had a lot of trades today, prices are sitting in a very tight consolidation. Shouldn't be hammering out too many trades. Okay. Any further questions? Last one I want to show you is US Swiss franc is actually getting quite interesting. I like how it's bounced. I spoke about this many times already. When it was dropping to that 0.94 level, I was saying, hey, be careful. It's a very, very key level there onto the daily time frame. Last time it got to that point was on the 16th of March. Now it's bounced back up. I would be looking for further upside on the US Swiss franc. And this upside, not so much driven by the dollar, not so much driven by the Swiss franc, but likely to be more from the dollar index. All right. So I hope you had a good session. I hope what I've shared with you makes sense and is helpful. With that, I'll probably do a quick end to the session. Thank you, Zoran. You're one of my persistent fan. So I'll look to see you at the next session again. For now, take care, trade well, trade safe. Take care now. Bye-bye.